All right, guys, this is the last one. I wanted to get through 16, but we're going to get through 15.4. So I figure if I get you through the three financial statements that all corporations use, then you guys would be good enough to go. The closing processes are an upgraded version of what we did in Chapter 8. It's kind of a step back. It's a little easier. I wish we could have gotten through it, but we can't, so we won't. But I am going to teach you how to do the balance sheet for a merchandising business. So if you remember back from Chapter 7, the big things I wanted to kind of remind you of were that there are four sections to the balance sheet. The heading, obviously, the asset section, the liabilities section, and the owner's equity section. We have the same thing here on the balance sheet for a merchandising corporation. Well, we've got some different types of assets we need to deal with. We've got some different types of liabilities we need to work with. We also have merchandise we need to deal with, as well as all of our employee taxes we need to position. And we need to break down our current assets versus our planned assets or our capital assets, as well as our current liabilities versus our long-term liabilities. Now, we're not going to do the example of that, but if we had a notes payable account, which would indicate a long-term debt like a mortgage or vehicle loans, loan of any type, we'd have to create a separate section in our liability section to account for that. But this is basically a scaled up version of what we did in Chapter 7 last year. So I'm just going to jump right in. So we're going to prepare a balance sheet. That's our objective here. That's our standard and our indicator. You can go through this at your leisure. I'm going to just kind of point you at it. Assets, liabilities, and equity. So obviously we have to do our income statement first to do the statement of changes to owner's equity. And then we have to do the statement of shareholder equity in order to do the balance sheet. So it's income statement first, shareholder equity second, balance sheet, 1, 2, 3. Is that three fingers? Yeah, three fingers. Okay. So that's the order you have to do them in. You may see that on a certification exam sometime in the future. So we got accounting period. I want to review with you the current liabilities. It's any liability that's due within a year. And we're looking at the fiscal year. Same thing with long-term liabilities. And if we're looking at current assets versus long-term assets or plant assets, or you may see them referenced as capital assets, they are all talking about the same thing. It's any asset that is going to be used up over more than 1 year, which is where depreciation comes in. So at the end, you may have to do supporting schedules, especially with the IRS. So you may have to prepare additional documentation, and it's pretty straightforward stuff. Most of the time, as long as you're reporting this stuff out, summing it, and giving a total, you're in pretty good shape. It's the last page of the chapter. We'll take a look at it. So obviously, we need our worksheet. Man, Chapter 14 is just critical to the accounting process. So there it is. I've included a PDF of the worksheet, as well as the shareholder equity, the statement of changes of shareholder equity. Hint, hint, that's the answer key to the on your own problem for Chapter 15.3. Do 15.3 first, though, and then check your answers, okay? So I was going to make you go through here, a lot of in-class stuff, because this is a little difficult. So balance sheet, assets, liabilities, and equities on specific date. The date we are preparing for is December 31st, last day of the fiscal year, just like everything else we've done here. So what's it telling us? Well, financial health of the company, net worth, net loss, where we are positioned. And we got to do the statement of shareholder equity as well as the income statement first. And then we go to the balance sheet section on the worksheet primarily, and then we look at the statement of shareholder equity second for that last section on here. Okay, so current assets section, this is what it looks like. Now, this looks very much like what we did last year in Chapter 7.3, I believe, 7.2. So we set it up, who, what, when, set it up with the assets section. But you'll notice here we have a current assets section here, and Let me go down one more. Then we got a plan assets section. So we've got a little bit of math we've got to do on this. So obviously cash being king, we listed out in the center column because of summary data. But then we've got some assets that have contra accounts which reduce the value. We've got to report them for full disclosure or adequate disclosure. And then we derive a sum based on the difference between the asset and its contra account. So we've depreciated our merchandise inventory. We've done a physical count. This is what we've got. Then we go through and we look at the ending value of our supplies, office, and store, as well as our insurance. And then we go through with a calculator and add it up. Okay? So this is what we got. This plus this plus this plus this plus this plus this plus this should equal this if you've done it right. Use a spreadsheet. Okay. So let's go down here. So the assets is divided into two sections. Obviously, key concept, current asset and plan asset. Short-term and long-term asset. Current asset being less than a year. Plan asset being a year or more. Book value. Okay, remember that term? Difference between the asset account and the contra account. So anything that's going back to here. Again, demonstrated here, uncollectible accounts. That's a contra account for accounts receivable. Okay. So it's a balance of the asset account minus the balance of the contra account equals book value. So looking at plan assets, same concept apply here. So we got office equipment, it's a value minus depreciation. So how much of it do we use up based on what we project the life cycle to be? How much did we draw down? Okay. And remember when we were doing the records in the chapter 14 section where we had kept track of how much the item had devalued over a year and how much we depreciated it. Okay. This is the value left. Looks like we're going to need to buy some materials. Well, we had a good year. Maybe we take some of our retained earnings and we spend it to replace some equipment. Okay. Then go back and recalculate our federal income tax. Maybe. All right, but we go through and we look at our equipment minus depreciation, sum it up, and get our total plant assets here. Then what we do is go back to our current assets, add the sum of current assets to the sum of plant assets. We get the sum of all our assets. Now, when you're looking at stock price, when you're looking at mergers and acquisitions, everybody's really interested in this number here. So just to give you a point of reference for how this works in the real world, what's the value of just the stuff the company has? And if we were talking about things like licensing and intellectual property, that would go up in a separate category, intellectual property. So we'd have to value that. That would be branding, especially if you're like McDonald's, where you make your money through franchise fees. What is the value of the McDonald's name? What is the value of the Nike name? Literally, you'd plug that in as a separate category here. Okie doke, moving on. Then we got the liabilities section. Very straightforward. So we have current liabilities here. Okay, all short term. Accounts payable, if we had notes payable like a mortgage or we owed on our vehicle fleet, we'd have a separate category like this under down here before our total liabilities, and we plug in all those notes that we're holding. Okay, it's really straightforward accounting. Liability section is the easy part. So you list them out just like they appear on the worksheet in the order that they appear on the worksheet, and then you add them up. So total liabilities. So can you guess what's next? We have our total assets and our total liabilities. And they don't match, do they? So we got to figure out where the difference is. And you remember the accounting equation, what is it? Yes, assets equals liabilities plus owner's equity. So now we've got to go into our equity section. All right, moving forward. Gee, we have this cool report that we just did where we have stockholders' equity. We create a header, value of the capital stock total. Remember, that's the value of our existing stock plus the new issue. Then we have our retained earnings, which we ran some math on. So this is what we've got. We added the $10,000 or whatever it was to the net income that we had, which increased our capital. So our retained earnings was $71,000. So then we add the value of our stock to our retained earnings to get the total value of our equity. And then we do some more math. So that, ladies and gentlemen, is how we do the balance sheet. So we're looking at our assets. Okay, then we got our liabilities. So we add 29,000 to 196.07, and we get the value of all our assets, which is 225,118 and change. So this plus this has to equal this, and here it does. So yeah, I got a lot of slides here, and yeah, the chapter's long. And yeah, I just want to take like 1 minute to look at the chapter, and then we'll go into the demonstration. All right, let me move this out of the way. Okay. So I'm not going to belabor this too much because I don't want this to be a lengthy video. I don't want to, oh, gee whiz. Finicky today. I get using the Dell rather than my PC. Okay. Here's what we did last time. All right. So we are looking at this, and this follows along with the PowerPoint. So again, I'm reinforcing contra account, reinforcing the concept of book value, which is the value of the asset minus the value of the contra account. And remember, on the financial report, like all financial reports, we work from greater detail on the left to summary detail on the right. So individual account value goes to the left. If we got to run math, that goes in the middle, or if it's summary data already, goes in the middle. And then the totals, the sums, go to in the far right column. So obviously more detail in the left columns. So let's move down here. Plan asset section. I just want to reinforce this. And again, this is where your single line is extremely important. I know I fuss at you, and I know I keep fussing at you, and I know I keep reinforcing it, but you've got to put this here. You have to show an external third party that, yes, this is math based on these two numbers, okay? And that this is math based on these two numbers, and that this is math based on these two numbers. That's what it means. Okay. So again, sum the plan assets, sum the current assets to get total assets. This is pretty straightforward stuff. You guys are smart. You can reason through this really well. Then we do the liability section, again, demonstrating a little more clearly. Daggone it. Okay, demonstrating a little more clearly, we just go down the worksheet. We create the liability section, break it up into current liabilities. If we had long-term liabilities, we'd break them up there. And then we just list the account balances in the center column, sum them up, and that's very straightforward. Okay, so long-term liabilities, again, the book states, like I was suggesting, that a mortgage payable. So if you got a long-term mortgage, yeah, you put it in here. Okay. All right. There are the instructions, and then the stockholder equity section. We've done the math. All we've got to do is report it out here on the balance sheet. Okay. Now, the one thing I wanted to show you here, this is the completed balance sheet, and the answer key I'm going to give you supports this, and I'm going to walk you through how to do it. So it's pretty straightforward, and I'll be quick about it. But the one thing I wanted to talk to you about was the supporting schedule. Okay, you may be required to provide that, especially when you're filing a corporate tax return. They may want to see a supporting schedule showing your calculation, showing your balances. So it's like your schedule of accounts receivable and schedule of accounts payable. Same concept. All right, that's chapter 15.4. Let's jump in and do this and get it over with. Okay, so I've gone through and taken the liberty of pre-filling the asset section, the liability section. Okay, again, ACCIII doesn't indent. Okay, current assets with a colon here. Everything that's not a header needs to be indented. See, because you get down here to plan assets and it kind of just blends in. We don't want that to happen. We want this to pop, so everything needs to be indented to tab if you were doing this for real. And accounting software like QuickBooks, We'll do this for you when it prepares the accounting report, but I want you to understand what it's supposed to look like. So what we're doing here is I'm just going to use the worksheet, and I'm just going to go through and start plugging this stuff in. So cash value 12,848. And again, you probably will find it easier to go through the worksheet and plug in this information first rather than working across the rows. I find it easier to do the columns and then go in and put in the dollar values later. So I'm going to do that this way. Okay, petty cash, we got $300. Okay, so our accounts receivable. And again, this is where we're working on one of the contra accounts. And we got our uncollectible accounts, which is, as a manager, I always hate seeing that, but it's just a real fact of life. So, and then we run the math. This minus this equals this. Notice the single line there. We got 15,911 that we can expect to calculate. Now, as a manager, maybe you're an accounts receivable manager. Maybe you set one of your goals to reduce this, a couple of percent. Maybe you reduce it to 2,000 rather than 2,500. You got to have to be pretty aggressive to do that, but that may be one of your performance goals you set for yourself and your department. So value of our merchandise is nice. Then E54.59, I believe. And again, I've given you a PDF that has this information on it for the on your own problem. All you have to do is pull it up, and it's got the shareholder equity statement. So you can go in and take a look at that, and just go down and do what I'm doing once you get the problem set up. Okay, you've done all the math here, and this is easy if you've done it right. Okay, so what we're doing here is we're going through and we're summing the value of our middle column here to derive our total assets. All right, our total current assets. $223,214.13. Now we go to our durable goods, our durable assets. So our office equipment. And then we got our depreciation here. Okay, again, this minus this equals this. So we're going to need to buy some stuff based on what I'm seeing here. Then, okay, moving on to our store equipment, our display cases, our racks, our shelving, the cool signage, depreciation here. Customers are hard on stuff. They don't own it. It's not ours. No respect for property. Okay, so we're probably going to need to buy some of this new shelving too. Okay. So this plus this is going to equal this. Okay, and then so we have some of our current assets and some of our physical plant assets. So this plus this is going to equal 235, 902, 88. Okay, so this is the tough section. It's a little more lengthy of the section in our problem here. Then we just go through now in the liability section, create another header, current liabilities with the colon. Again, this should be indented through here. Total liabilities as our bottom row should be flush with the margin. Same thing with our total assets here, flush with the margin, but you indent everything else, okay? And what you're going to do when you're doing store equipment, you have that indented, and then you do a double indent on the accumulated depreciation. So contra accounts get indented. And again, just like on our journals, you indent them to show they're associated with the transaction on the row above. So this is just neat accounting procedures. So accounts payable, I'm going to work on my middle column here. Okay. And then 2603.79. And then 840. 529.98. And then 123.95. So sales tax payable, just let me do a check here, 1848.25. Okay, this payable here, this is stuff that we haven't paid yet. It's due in January. So we're at the end of December. Remember, if you remember back to our payables, they're due the following month on the 15th. So we got to pay this in January. Okay, unemployment tax federal, 32. And 216. Then health insurance payable. Boy, things have changed. That's a huge expense now and just keeps getting larger. When you guys are looking for full-time employment, do not underestimate the value of your benefits plan, your health care package, your vision plan, your dental plan, any investment plan. Take advantage of it. Your employer is spending a fortune on it. Just assume anywhere between a third and a half of your salary is going to be an additional cost to the employer based on the way things are going with healthcare and compensation. So your company is spending a lot of money on you, 2,200. So just understand that they're not just paying you in cash. They're paying part of your Social Security taxes. They're paying your part of your Medicare tax. They're paying part of your they're paying your unemployment insurance, and then they're paying a ton of money on your healthcare, your vision, and your dental plan. Okay, so our total liabilities here: 2519, 25,196.05. Okay. Straightforward. Okay, then we go to our third section. We're almost done, guys. So stockholder equity. We just go back over to our statement of shareholder equity, statement of changes to shareholder equity, SCOE, and then we just pull the numbers. So our capital stock value is 110,000 that we just calculated. And then we got a retained earnings of 100,000. Remember, that's a sum of the prior year plus our new 6.83. And that's not the right one. Total stockholders' equity. There we go. Stockholder equity. So 210,706.83 again. Sum of the value of our capital stock plus our retained earnings. So this plus this should equal this. Let's see if it does. Yep, 235,902.88. Hey guys, that is our balance sheet. So you've got all the materials here. You got the text. You've got the PowerPoint presentation. I've cut the chapter out of the textbook for you. You've got the video here, and you've got the answer key to our Work Together 15-4 problem. Do the normal, take a picture of it, submit it up to Schoology. If I don't see you again at graduation, you seniors, have a great summer and come back and visit me. All right, talk to you. Bye.